Welcome, grade 12s. Yes, you with Ashraf Patel on Learn Extra Accounting. In today's session, what do you think we're doing? We are looking at reconciliation, internal control, as well as inventory valuation. Now, what does Ashraf always say? Don't fear when Ashraf is near. Why? Because guys, working through this session, you are going to make sure that you know exactly what's going on in these sections. Why? Because you are the accounting stars out there. So let's get right on and into a question so you can see exactly this is how I approach a question in the exams. So guys, this is the question. You are given a bank reconciliation statement of Zenobia Traders on the 30th of April, as you can see, as well as a bank reconciliation statement for the next month on the 31st of May. In other words, you are given two bank reconciliation statements. Got that? Right. What are we supposed to do? The first question says here, according to the April bank statement, be very careful. What does Ashraf say? What do you do when you receive your question paper? When you're working on a question, what is it that you do? RTFQ. What does that stand for? What's this acronym all about? Read the full question. And remember, when you're angry, that's not what you say, but that for a later stage. According to the April bank statement, does Zenobia Traders have a favorable bank balance or an overdraft? Give a reason for your answer. So guys, let's go back. There's my April bank reconciliation statement. Got it? What are they asking you about? They are asking you about the balance as per your bank statement. Okay. There's your balance. It says here, debit balance as per bank statement, 26,650. Now, according to the April bank statement, does Zenobia Traders have a favorable bank balance or an overdraft? Give a reason for your answer. Immediately you can see that this is an overdraft. Why do we say that? The question says, give a reason for your answer. Let's go back and look at the question. It says here, debit balance as per bank statement. Now, once again, what do we remember? What is the relationship between us and our bank? If we have a debit balance as per bank statement, it is telling us that the bank account is in overdraft. In other words, we are debtors. We are owing the bank money. Remember, the relationship between you and your bank is that of debtor and creditor. I hope you understand that. Great. Let's move on. So, the reason, because clearly indicated, what is indicated to you? That this is a debit balance. So this tells you clearly that because it's a debit balance, your bank account is in overdraft as per the bank's records. Got that? Brilliant. Let's move on. The next question here, calculate the missing bank balance in the general ledger of Zenobia Traders on the 30th of April 2011. State whether this is a favorable or an unfavorable balance. Okay. There's my question once again. Note what we've done for you. In the answer book as well, we've got the question so you can see exactly what are we talking about. Now, let's start by saying, look at my question. If I were to do this here in terms of my balance. There goes. This is the missing bank figure that you want to calculate here. That's the one. So ideally, what you have to now do is take these figures and separate them into two different columns. And how do we do that? Watch here. Debit balance as per bank statement, 26,650. So immediately I say 26,650. That one is dealt with. Next one, all of these are outstanding checks. All of these are my outstanding checks. So definitely you know that your outstanding checks are debited. So clearly, when you come onto your answer book, you say, fine, let's take these amounts here. 285. That's 285. Remember, this is a calculation that you are doing, right? And just to make matters easier for us, let's just erase this and let's put it all in the same place so we know exactly what we are doing. There goes. This was a debit balance, which we have indicated. There it is. Next, all we said, these are my outstanding checks. These are all debited amounts, so we take them one by one. 285, 285. Next one, 260, 260. Notice I'm putting them all together as debit balances. The next one, 775. We've done the 260, 775, 775, still in the debit. 2,300. 2,300. The next one, 5,000. So I am putting all the debits in one line. Reason, I want to calculate a missing figure. So here goes now. Next one, outstanding deposits, 41,350. So therefore, 41,350. It says credit outstanding deposit. Notice I put it separate from the others. Credit amount wrongly debited on the bank statement, 250. That amount is 250. What do I now do? I now check. I've got all the information that I've taken from my bank statement and now need to calculate the missing figure. Here we calculate our missing figure. What do? Let's take our calculator. 41,350 plus 250 minus 26,650. Watch what I'm doing here, guys. Minus 285 minus 260 minus 775 minus 2,300 minus 5,000. And my answer is 6,000. Here's my answer. 6,330. That's the missing figure. Now, what is that balance? That is the missing bank balance that I have calculated. And notice that this side is greater, which is my credit side. So obviously, this is a debit balance of 6,330. You will notice that the question also specified, state whether this is a favorable or an unfavorable balance. Remember, as per our books, a debit balance indicates that it's a favorable bank balance. Got that, guys? Good. Let's go on to the next one. It says there, check number 1, 2, 3 does not appear on the May bank reconciliation statement. The payee, C. Cheese, did not deposit this check for commission. Briefly explain what the problem is with check number 123. Okay, let's find check number 123. There goes. Check number 123. Watch. Important. RTFQ. Dated the 25th of November, indicating to you that this check appeared in November, December, January, February, March, and April. Got that? I'm sure you can count 6 months. This check has appeared in 6 consecutive bank reconciliation statements. And you do know that once a check is older than 6 months, what happens to it? Come on, guys. Yes, this is what we call a, yes, what is it? A stale check. Okay? What do we mean by that? By that we mean that once a check is older than 6 months, this check is no longer negotiable. Come on, grade 12s, what do we mean by that? By that we mean that this check cannot be used any longer. Why? Because it is older than 6 months. So therefore, we refer to this one as a stale check. So that's the problem with check number 123. What is it? It's a stale check. It can no longer be used, and therefore something needs to be done with it. Got it? Okay. Now look at my next question. What entries would the bookkeeper have to make during May to deal with this check? Yes, it is a stale check. So what are we going to do about it? Definitely, we must take some action. What's the action we're going to take? 1, cancel this check where in your cash receipts journal. Very important. Cancel it in your cash receipts journal. Immediately it tells you that what are you doing to your bank account? When you are using the CRJ, you are debiting your bank account. Agreed? Because it's a CRJ entry. Debit bank. Credit. What was this check for? Do you recall? This check was for commission. So therefore, you're going to credit an account called commission expense. Now understand, what are you doing? You're cancelling this transaction. And to further illustrate the point for you, watch. If this is my commission expense, it was initially debited, and the amount for that check was, let's get the amount for the check. The amount of the check was 285 Rand. Therefore, what are we saying? The initial check was a debit of 285, and the cancellation is a credit of 285. Notice you are cancelling this expense. That's the purpose. That's the reason with the entry in my cash receipts journal. Got that? Brilliant. Let's move on. Which of the checks shown as outstanding on the April bank reconciliation statement was reflected on the May bank statement? Let's read this again. Let's read this again because it needs a bit of double reading sometimes. Which of the checks shown as outstanding on the April bank recon? Let's go back. So you know, here's my April bank recon, this one here, right? So it says, which of these checks, what about them? Which of those checks was reflected on the May bank statement? Write down only the check numbers. Let's go back and see what we have here. Now, take a note of this. Check number 335, this one here, appears there and it appears here. Clear? Check number 438 appears there but does not appear on this bank recon of the next month. Which one was that? 438. So therefore, we say check number 438, right? It says here, which of the checks shown as outstanding on the April bank reconciliation statement was reflected on the May bank statement? I'm putting here this one here for a reason. Watch it. Let's go to the previous question again. Then we have 447, and notice that 447 does not appear. So in other words, 335 appears here, 438 does not appear. So let's just mark it with a different marking. Right? 447 does not appear, as you can clearly see, and 448, this one here, appears here. Right. So in other words, check number 438 and check number 447, those two checks do not reappear on this bank reconciliation statement. Am I right? Okay, what does this mean? Look at the question. Which of the checks shown as outstanding on the April bank reconciliation statement was reflected in the May bank statement? Come guys, watch this here. 438 and 447. In other words, what are we saying? We are saying that these two checks here were outstanding in April. They appeared on the May bank statement. As a result, they do not reappear on the bank recon of the next month. So be very careful and understand exactly what the question requires of you. Let's move on. The bank reconciliation on the 30th of April shows an item credit amount wrongly debited on the bank statement, 250. The question says, was this error corrected by the bank during May? Give a reason for your answer. Let's check it out. There's the error that they are alluding to. This one here. That's the error. Now, is any mention made of the error on the next month's bank recon? Nothing is mentioned. So therefore, the question says, was this error corrected? And your answer is yes. Very important. Give a reason for your answer. Why do you say yes? Because in the next month's bank recon, the May bank recon, in this one here, absolutely nothing is mentioned about the error. So clearly it shows you that the error has been corrected. So when you are answering a question of this nature, what will you say? You will say yes. Yes, the error was corrected. Reason, no entry or no mention is made in the May bank reconciliation statement. Remember, you find Ashraf abbreviating. That's not what you're going to be doing. Why? Because Ashraf has a license and you don't. Therefore, when you're writing your exams, make sure that you write everything in full. Don't be a fool, guys. Write it in full. Okay, coming back to the question, what is the reason? Yes, it has been corrected. Reason, no mention is made in the bank reconciliation statement of the next month, indicating that the error has now been corrected. Let's go on. The bank reconciliation statement says there that credit amount wrongly debited on the bank statement. It says, give an example of the type of error that the bank could have made. Now, the bank are crediting you with an amount that was wrongly debited. When does the bank debit your account? The bank will debit your account when they are taking money out of your account. Remember that. Why? That's the relationship we have with our bank. When we're debiting in our books, they are crediting in their books. When we credit in our CPJ, they are debiting in the bank statement. So it says credit amount wrongly debited. In other words, they incorrectly debited your account with an amount that was not yours. So the question says, give an example of the type of error that the bank could have made. What error did they do? In other words, they have taken money out of your account erroneously. Therefore, they have debited your account. What are possible reasons? One, let's look at the reason. It says you give one example. One, I would say that the bank charges figure or the bank charges amount may have been doubled. In other words, what they did is they took off bank charges twice, so they wrongly debited your account. Okay, think of another reason. Maybe, just maybe, something went wrong, awry. I don't know what happened there, but the bank made the mistake whereby they decreased your amount by an amount that was not supposed to have to be taken out of your account. Okay, so understand that bank errors will be corrected by the bank. Let's go on. Explain why checks number 335 and 448 appear on both the April and May bank reconciliation statements. Give a different reason for each check. Notice how I go through the question, underline and get the pertinent information. So obviously, reference has been made to check number 335. Let's go back and look at 335. Look at 335. It's dated the 28th of February. It's dated the 28th of February. And here, it's dated the 28th of February. So this means that this check has not been presented for payment. Simple. This check is a current check given to somebody who has not presented it for payment. So therefore, what do we say? We say check number 335. This check was not presented for payment. In other words, we deal with it like debit outstanding check. This check was not presented for payment. It's a current dated check, and the only thing that the payee did not present for payment. That's the only reason. Let's look at another one. Number 448. What do we know about number 448? What do they tell us about 448? Let's go back and see. Number 448, it's dated the 25th of June. In other words, this check, number 448, cannot be presented for payment. Why not? Come on, you should be shouting out the answers there. As you're watching, I'm sure you're getting interested and you're shouting out the answers as you're watching me explain. What is that? 448 is what we call a post-dated check, right? In other words, this check is also not presented for payment, but this check, number 448, cannot be presented for payment. Why? Because it's a post-dated check. And what do we know about a post-dated check? A check that can only be presented on the date that appears on the check. Watch here. The date that's appearing on this check here is the 25th of June. In other words, there's no way that this check can be presented for payment. So yes, both these checks are outstanding. One was just not presented for payment. Maybe the person has enough money, doesn't need the money right now. And the second one, number 448, cannot be presented for payment. The reason? It's a post-dated check. Okay, guys, let's move on. As the internal auditor, you are the internal auditor of Zenobia Traders. Okay, you have a title now. You have noticed that there has been increase in the number of debtors who have complained that their payments have not been reflected on their statements from us. So, understand, a debtor comes to you and says, "Sir, I've paid this amount, but it's not reflecting on my statement. Here's my statement, it's not reflecting on there. What's the problem? What seems to be the problem?" On investigation, you find that the cashier has been handwriting receipts, where Zenobia Traders have a program that automatically prints these receipts when recording the receipt of the money on the computer. Right? Clearly you can see there's a problem. What's the problem? What do you suspect is happening in the above scenario? Clearly evident to you. You have a computer program whereby when you receive money, you capture the information and it prints out a computer receipt for your debtors. This means now that certainly there is a problem. What's happening? The cashier is involved in theft. Clearly. Okay? This means that the cashier is receiving the money. You are the cashier. We're not saying you stealing the money, but definitely the cashier is receiving the money. The cashier is writing out a handwritten receipt, okay? Whereas there had to be a printed receipt. Now, this means that definitely in this scenario, the cashier is involved in theft. Why? Because those amounts are not reflecting on the statements of your debtors. So clearly, there's a case of embezzlement of funds. Money is going astray. Money is not coming into the business where it's supposed to come into the business. And therefore, something needs to be done. So in this scenario, definitely money is being stolen. And I'm sure you're anxious on the next question. What does the question tell us? If after an investigation, the cashier is suspected of doing something illegal, give 2 steps that you can take. Okay, what are we going to do? Obviously, this involves a cashier, it involves embezzlement of funds. So immediately you know that the first thing that needs to be done is that you got to inform management. Okay? And once management has been informed, what else are we going to do? Remember, you've investigated the matter, you have found the person guilty, right? Immediately you know that some form of disciplinary action some kind of disciplinary action will have to be taken. Like what? Either the cashier is moved to another place, given a final warning, depending on the severity, depending on what other information you can come up with in the investigation. Now, then we find learners tend to say, fire her or fire him. Remember, guys, it's not that easy. In terms of labor law, a person is entitled to a hearing, right? So we have said, after the investigations have been completed, now the disciplinary action will follow. If you find the person guilty, then yes, the person could be charged. Why? Because the person has been found guilty of stealing. That's right, the person is then charged. Or the person could face dismissal, right? You could fire the person. Now, but remember the process. Like I'm saying, you can't just say fire the person. It doesn't work that way. You have to go through the process, get the necessary information, and once you have all your ducks in a row, and there's a case for dismissal, yes, then the person could be dismissed. Clear? Okay, let's go on to the next question. Remember, the scenario hasn't changed. It's the same scenario. We're not going to go through it again. The question now says, give one internal control measure that could be implemented in the accounting department to avoid any further problems of this type occurring. Remember, you want now an internal control measure. What's very important, whenever we're dealing with money, remember, we have separation or segregation of duties. Separate your duties. What do we mean by this here? By this we mean that the person collecting the cash should not be the same person that's depositing the cash. Why? Because obviously, if one person is doing all that, it opens up avenues for a scenario like this to take place. So therefore, definitely what you have to do is separate your duties. Have different people receiving the money and a different person making sure that you deposit the money into the bank account. What else can we be doing? What about a debtors recon? This should be done on a continuous basis. Why? To ensure that by doing my debtors reconciliation, I will find out where a debtor will complain and say, sorry sir, but this amount is not reflected on my statement, or there seems to be a problem with my account, I've paid the amount and it's not being reflected. So continuously, on a regular basis, do a debtors recon. You can also employ a debtors clerk, a person that will be tasked with looking after the debtors in such a way that you know that if there's anything going wrong with these debtors, then this debtors clerk would be responsible. So, internal control, what's the purpose of internal control in our business? Internal control is set up to safeguard the assets of a business. And remember, amongst the assets, one of them are our debtors. So to protect our asset, we need to ensure that we have effective internal control measures in place. Let's go on. The part of the question on reconciliation, it says here, how do creditors assist with the cash flow in your business? Very interesting question. Once again, how do creditors assist with the cash flow in the business? Right. Understand that your creditors supply you goods within which a certain time, you have a time limit in which to pay them. So you are basically What are you doing? You're taking goods from your creditors. They are supplying you the goods. You're not paying them immediately. You're going to be paying them after, you pay after 60 or 90 days, depending on the terms that have been given to you by creditors. You are buying now on credit and you are paying at a later stage. Understand that you are actually using the creditor's money. Why? For the 30 days or the 60 days. They are paying you, you're using their money, and by you using their money, they are assisting your cash flow. You are selling the goods and you are receiving the money, but you're not paying them as yet. So, in this way here, how are they assisting you with your cash flow? Money is being generated. Watch the use of the word generated, because remember, this ties in directly with cash flow statements, which you need to be au fait with, right? So maybe in a session some other time, when we're talking about cash flow statements, you will also see the impact of creditors on your cash flow statement. So in other words, money is being generated. That's right. Remember this word here, an important word. Money is being generated, so we are actually using the creditor's money to assist us with our cash flow. Next question. A business needs to have strict internal control procedures in place for its creditors. Give 2 procedures that a business could use to ensure good control of its creditors. Now remember, what we definitely have to know from the outset is that a creditor is somebody that we owe money to. So we are talking about somebody that we owe money to. Why are we owing this person money? Obviously, this person had provided us with goods or services, and as a result, we are owing them money. Right. Now, internal control procedures. What do we have to put into place? Let's look at it. Definitely, you are going to ensure that you have a credit manager. What will this person do? This person will monitor your creditors like you needed a debtors clerk dealing with your debtors. Your credit manager would be dealing with your credit purchases. In other words, all those that are owing you money. What would they check on? They would check on prompt payments. Are we paying our accounts on time? Are we making prompt payments to our creditors? Why? Because if we are not doing this, there's a possibility that we will have a bad reputation with our creditors. Number 2, you could also be charged interest on your overdue accounts, right? So all of these considerations you have to take into account when you are working with your creditors. What else could there be? Whenever you are dealing with your creditors, there should also be separation of duties. We've dealt with this. We've alluded to this when we dealt with our debtors. Separation of duties. In other words, the person that is ordering the goods should not be the person that is receiving the goods. Why? Because there is a problem when one person is involved or directly responsible with a number of important activities. Then that system is open to abuse. Remember the debtors clerk that was writing out the fake receipts and depositing the money? By the same token, even when we're dealing with our creditors, we need to have separation of duties. Right, what's another one we can have? Maybe use an internal auditor. Now, remember that you get 2 types of auditors that you will be dealing with. An internal auditor is appointed by the directors of a firm to check on the internal control measures within a company or the business. An external auditor is somebody else, but internally you need an internal auditor to check and to make sure that the internal control mechanisms that you have, procedures that you have put into place, are they being carried out? So these are just some of the examples that you could use, and there are many more. There are many, many more examples. And here again, understand that if your response makes sense, then definitely you would be credited with the answer. Next one, suggest 2 ways in which the bookkeeper could be defrauding the business by using the creditors system. We've alluded to this. Let's identify them. What are they? Number 1, how could a bookkeeper using the creditor system be defrauding the business? Think of examples. And we're not asking you to think like a crook, because we want to catch the crook. That's what accounting is all about, guys. Accounting is a control mechanism. We need to put controls in place to ensure that our assets are safeguarded. Now, our creditors. How could a person defraud the system? Watch. The person that orders goods, could they order for themselves? Yes, because very often you can find a person who says, I'm ordering for the business, and then you collude with the supplier and you say, this part of the order, deliver it at this residence here. So what are you doing? You're ordering goods, making it appear that the goods are for the business, but in the meantime, they are for personal use. So in that way, what are you doing? You're making the business pay for your goods. Definitely, you are defrauding the business, right? 2, you could unnecessarily make an arrangement with the supplier and say, I'm going to make as if we have paid interest on the overdue account, and then you make sure that you take the interest and you deposit it into my account. Once again, what are you doing? You're making an unnecessary payment from the business, but you are colluding with the supplier to ensure that that person takes that amount out of their account and deposits into your account. In this way, you can see this is how a person could be defrauding a business using the creditor system. Remember, obviously, this system means that you have to collude with somebody, one of the suppliers, in order for this to take place. All right, okay, let's move on. Remember, when it comes to the ratios, it is of utmost importance that you learn your ratios. Please, guys, I'm appealing to you. Do not walk into an exam room and you don't know your ratios. Immediately you will notice in this question, it says here, give the formula to calculate the creditor's payment period in days. They're not asking you to do the calculation. They are asking you that if you were doing this calculation, what would you use? Definitely, you would take your average creditors right? Over what? Over your credit purchases times, the answer says, in days. They want it, so multiplied by 365 over 1. So obviously you can see this was probably worth 2 marks, and if you did not know this ratio, 2 marks were gone. Goodbye to 2 marks. Please, grade 12s, ensure that you know your ratios, because you will see the importance of them in other sections. And once again, notice this has popped up in a question on creditors and internal control. Well, that does it for this section. What we're going to do is we're going to take a break, and when we come back from our break, we're going to be doing another question on inventory valuation. I'm sure you want to know more, so therefore, don't stray or go away. With you in a jiffy. Welcome back, the accounting boffins out there. Yes, you my accounting stars, guys. Why? Because we're going to make sure that we get those A's in accounting, aren't we? Yes. So, with Learn Extra and Ashraf Patel, we're going to make that dream a reality. Okay, now in order for that to happen, we need to work. So let's get right to it. We're looking at a situation now where we're dealing with inventory valuation. Now, before I actually get into the question, there's a few things that I need to clear up with you. Remember, we have 2 stock methods. What are they? They are perpetual stock. What do we know about perpetual stock? Perpetual stock is where we keep a running record of stock. In other words, we use a trading stock account, right? Obviously, has its advantages, has its disadvantages. That's not what we're going into here. The next stock system is what we call the periodic stock system. Now, in this one here, we do not keep a running record of stock. In other words, we do not know what the cost of sales is. This is only calculated at the end of the financial period. When you are using the perpetual stock method, at any one time, if you want to know how much stock you have, you just flip open, check your trading stock account, and it gives you a balance. With the periodic system, not so easy. Why? Because you do not keep a running record of stock. In other words, no record is kept of your cost of sales. Okay, so that deals with stock systems. Clear? Perpetual and periodic. Stock systems. Now, when we talk about inventory valuation, what are we now referring to? We are referring to the value of your trading stock on hand at the end of your financial year. It can be valued according to specific identification method, a system that you are au fait with, you've done it up to now, or you could use weighted average, or you could use FIFO, first in, first out, right? And there are other methods as well, but that falls beyond the ambit of your curriculum. So what are you supposed to know? You are supposed to know specific identification method. In other words, you identify an amount and you identify the price of that stock, and that's the amount. The second one is weighted average, and the third one is FIFO. So those are stock valuation methods. Now, clearly, grade 12s, you can immediately see a distinct difference between what we spoke about early on, what I alluded to early on in terms of stock systems. We talked about perpetual and periodic, and when we talk about stock valuation, we're talking about specific identification, weighted average, and FIFO. Got that? I almost made a mistake there. Let's go through it one more time. When we talk about stock valuation, we're talking about specific identification, weighted average, and FIFO. Okay, let's get into our question. It says here that Suji Shoes buys and sells one type of shoe. The business uses periodic inventory system, stock system. Does it ring a bell? Certainly it does. And the weighted average method of valuing inventory. So the stock system we are using is periodic, and the stock valuing we are using is weighted average. Clear, guys? So now you know exactly what am I referring to. Okay, now what does the question expect us to do? There's the detail regarding my question. All the information regarding my question is given to me there. It says here, number 2.1, calculate the weighted average value per unit on the 31st of August. So what are we calculating? The weighted average when? On the 31st of August 2011. The easiest way to do this particular section is write down the values of all your purchases. Let's start. 145 pairs on hand, valued at 180 per shoe. It's supposed to be here on the 1st of August. So here goes. We say 145 times 180, and the amount is 26,100. So 26,100 is the first value that I have. Which one was that? That was the 145 pairs. Okay, let's do this as well. So it's 145 pairs. Let me put it there. There's the 145. Okay, next one. 125 at 210. So 125. So 125 times 210, and the value there is 26,250. 26,250. What am I doing? Notice I'm listing the quantity as well as the value. Very, very important. Quantity as well as the value. Let's carry on with the question. One of the suppliers was having a sale. We purchased 100 pairs for 11,000 Rand. So immediately I say 100 pairs at 11,000 Rand. You can clearly see what am I doing here. I'm listing the quantities that I'm purchasing as well as the value of that stock. So weighted average, quantity, value. Quantity, value. Keep that in mind all the time. Then 110 pairs of shoes were imported at 230 Rand per pair. Import duties paid was 3,610. I'm coming to that just now. Let's get this value first. 110 at 230. So here goes. 110 times 230 will give me 25,300. That's 110, 25,300, and 110 pairs. Okay, but now, on the 110 pairs, what is significant here is that import duties of 3,610 Rand were paid. Okay, so here goes, guys. Here's my 3,610, and I'm going to link that to that because that was the value of the import duties. Now understand this, that any cost that are incurred in bringing the goods to our business would form part of the cost price of that good. In other words, you have to bring in any charges that were incurred on our purchases. Clear? Great stuff. Okay. So, I have now taken into consideration all the items that I have purchased. There goes. Clear? Now I say fine. Let's add 26,100 plus 26,250 plus 11,000 plus 25,300 plus 3610 is equal to 92,000. It gives me 92,260, 92,260. What is that? That's the total value. There's it. There's my value of the goods that I have purchased. Okay. What do I also have to do? What did I record here as well? What did I take into account? The number, the quantity. And let's look at my quantity now. It's 145 plus 125 plus 100 plus 110, and that's 480. So the total number that I bought was 480. That's the number of shoes, and the value of that was the 92,260. Clear? Okay. What did the question say? Calculate the weighted average per unit on the 31st of August 2011. How am I going to do that? Take your 92,260, divide it by 480. Okay, and when we divide this here, you will notice, therefore, we take 92,260 divided by 480, and my answer for this one here is, let's do that, 92,260 divided by 480 is equal to 192 Rand and 20 cents. 192 Rand and 20 cents. Okay. So obviously, from this calculation, it becomes evident, it becomes clear to you that the average price per shoe was 192 Rand and 20 cents. So the unit average was 192.20. Come on guys, when we're dealing with averages, we want the average, the total, we want the weighted average of all my goods. Therefore, important, add your quantities to give you the 480, add the value to give you 92,260, divide it, it's going to give you the average of one pair. There goes, 192.20. Not so bad, isn't it? Sure, I'm sure you're beginning to understand and get to grips with this here. Next question. Calculate the value let's just get that right. Calculate the value of the inventory on hand on the 31st of August, round off to the nearest rand. Okay, what do we know? In terms of my question, I know that I had 140 pairs. I had 140 pairs were on hand. So immediately I say, fine, if it's 140 pairs, 140 pairs times, what was the unit that I calculated? Here's it here. Here's my unit value. I calculated it to be 192.20 192.20. Let's do that. We've got it there, times 140, and your answer will be 26909.16. They said to the nearest rand. So my answer here is 26909. Okay? Obviously, when the rounding factor takes, if you look at your calculator here, you find that it's 26909.16. Again, if you put 26909.16, it definitely won't be marked wrong. What you need to know is that calculate the value that you had. That was the value of shoes. That was the quantity of shoes times the weighted average that you calculated. Okay. Right. Let's go on to the next part of this question. Now the question says, draw up the trading account. That's what they want, the trading account, okay? And what is expected of you is that when you are doing a trading account, you need to know the format of your trading account. Very, very important. Okay, so here goes. Let's start. Obviously, it's August is your month. The year is 2011, right? The first item that you will have here is your opening stock. Please, grade 12s, a humble appeal to you once again. Do not use abbreviations in your exams. Yes, if it is done as a calculation, then by all means, be brief as possible. Even use abbreviations, no problem. But if you're going to do abbreviations in work that is required, then definitely it could be marked wrong. And you don't want to take that chance, do you? So therefore, yes, you would find me abbreviating on a continuous basis. That's only because of time constraints, okay? And because we're trying to get as much possible to you in a short space of time. Therefore, you're going to find me abbreviating. But please, guys, like I said, Ashraf has the license, you don't. Okay. What was the value of my opening stock? Let's go back. Remember, we calculated it. The value of my opening stock was 26,100. There goes. So here, 26,100 is the value of my opening stock. Next one. Did I buy goods? Remember, we are using the periodic system. Therefore, this amount here, my purchases, what was my purchases? Let me go and find my purchases. Remember, I had bought goods to the value of that one, and that one. So that was my purchases, wasn't it? So let's do that. 26,250 plus 11,000 plus 25,300 and 62,550. 62,550. That's the value of my purchases. Notice what you could have done. You could have shown that calculation as a separate calculation here and indicated those three figures that we had in brackets. Okay? So yes, when it comes to calculations and you need to show your calculations, a good method is to use this bracket to calculate the 62,550 by putting in the three components of purchases. Okay, what else did I have? Remember, I paid an import duty, didn't I? Import duty. And how much did I pay as my import duty? Let's go back and find the amount. Here goes. My import duties were 3,610. So therefore, import duties 3,610. Understand grade 12s, that at all times you need to put in all the detail regarding what will go into your trading account. Remember, it's your opening stock plus your purchases plus expenses on purchases. Like what? Like import duties, carriage on purchases, railage inwards. Be careful. Don't say you were not warned. Watch out for carriage on sales. Carriage on sales does not go into my trading account. It's a delivery expense. It has nothing to do with my trading account. So watch out for carriage on sales. It's a red herring. Don't get caught. Okay. Then the next thing that we do is we put in our sales figure. Remember, in our sales, what did we have for sales? We were told that, let's go back to the information. Shoes are sold at 400 Rand per pair. Right? You sold 400 Rand per pair. So watch this here, guys. Watch this here. If you had bought 480 and you have 140 left over, then definitely you have sold 340 pairs. Correct? Okay. Now, how much did you sell those at? You sold them at 400 Rand per pair. Let's pick up our calculator. 400 times 340 is equal to 136,000. Okay, what was the 136,000? The 136,000 represents my sales. So let's put it in. Sales 136,000. There's my sales figure. What else must I bring in? I now need to bring in my closing stock. So I bring in my closing stock, also referred to as final stock. And remember, I calculated this, didn't I? Where did I calculate it? Here's it here. That's the figure that I'm looking for, 26,909. Therefore, in this one here, 26,909. Let's just get it a bit clearer for you. Oopsie daisy, let's get that out of there. That was 136,000 and this was 26,909. Okay, now what do? Do I have all the information regarding my trading account? Certainly I do. Pick up my calculator. 136,000 is there already, plus 26,909 will give me a figure of 162,909. 162,909 minus 26,100 minus 62,550. I think that is wrong there. Let's just delete that. 26,100 is correct, minus 62,550 minus 3,610, and your answer is 76,49. Here goes. 76,49. Remember, this goes to profit and loss. Okay, this is what we regard as our gross profit, and there my trading account is done. And believe it or not, if you get this thing right, it's worth 12 marks. Come on guys, I'm sure you know exactly now how to go about doing a trading account. Okay, understand that most important, we were using periodic inventory. Okay, let's go on. Calculate the value of the inventory on hand on the 31st of August 2011 by using the FIFO inventory valuation method. Now, what's the secret? Ashraf's going to let you into a secret. Whenever you are working with FIFO, the secret, guys, is bottom up. Okay? In other words, start at the bottom and work yourself up. What am I referring to? This is what I'm referring to. Understand, when we say bottom up, we are saying that take this, start at the bottom and work yourself up to calculate your amount of shoes that you have on hand. So in other words, what does FIFO mean? First in, first out. Good? That means the goods that came in first are the goods that are sold first. In other words, the goods that you bought last are the goods that are left over. Come on, guys, easy to understand. First in, first out. So in other words, looking at this table that you see in front of you, definitely if you sold, that was sold already. First in, first out. So therefore, when you're using the FIFO method, bottom up, guys, start at the bottom. What do we have to take cognizance of? We have to take cognizance of, or we have to calculate the value of 140 pairs. Watch what I do. I start off with this 110, right? And this 110, I say 110 pairs, multiply it by, let's go back and get our values there. Remember, was 25,300, not forgetting the 3,610. So two amounts. What are my two amounts? 25,300 plus the 3,610. Okay, what have I done? I've catered for 110 pairs. That's it. But I need to cater for a total of 140 pairs because that is what is left over. And first in, first out. So, going back now. That one's taken care of. I now take of these pairs here. If I have 140 minus 110, watch here. 140 minus 110 would give me another 30 pairs. Another 30 pairs of which ones? Remember what we said? Bottom up. So this one has been dealt with. So I go to this one here. This one here was 100 pairs, valued at 11,000. So immediately I say 11,000 divided by 100 will give me the cost per pair. Multiply that by 30 pairs to give me a value of 3,300. Okay, so now 3,300 would be the value of these 30 pairs. Notice, 110 plus 30 will give me my total of 140. That's the number of pairs of shoes that I have on hand at the end of the year. Look at my calculator. 25,300 plus 3,610 plus 3,300, and this gives me my value of 32,210. 32,210. What is that, guys? That's the value of my inventory using the FIFO method of valuation. So clearly you can see immediately that using the FIFO method, I got a value of 32,210, whereas when I used this method, I had a value of 26,909. Same stock, identical 140 pairs. Weighted average, 26,909. And FIFO, my value is 32,210. Can you see a difference in the valuation? Yes, two different valuation methods. Okay, next question. The owner, Nadia, wants to sell her business. She approached you as the accountant of Suji Shoes and requested that you change their inventory valuation method to the FIFO method in order to create a higher profit and a higher closing inventory for the business to enable her to sell the business at a much higher price. Sounds fishy, but let's look at the question. Will it be ethical for Nadia to change the inventory valuation method? Provide two reasons to support your answer. Okay, number one, the answer is a definite no. I will not do that. Why not? It says there, provide two reasons to support your answer. Yes, the answer is no. What are the reasons? Number one, it is unethical. It is unethical to do something like this here. Why? Once a business has embarked on a particular method of valuation, it cannot nilly-willy just change from one method to another method. Certainly not. Why? Because of the concept of consistency. We have to be consistent in our method of valuation. We can't be changing figures, okay? Or to use terms that you would use, please don't use this in the exams, to jippo things in terms of your languages. No, we cannot go and alter a stock valuation method just to show a higher profit. Certainly that's not on. So therefore, definitely, it is unethical to do something like this. And what else is important? If a business, for a very good reason, needs to change its method of stock valuation, it needs to inform whom? Big brother? Yes, SARS. It needs to do this in writing to SARS, giving them very good reason why we need to change our method of stock valuation. Otherwise, you would be misleading the potential buyer. Understand that that is not ethical. We can't do things like this just to ensure that we can sell the business at a profit. So remember, what are we saying? We are saying yes, there's no way that you will allow this to happen. Why? You definitely not, because it's unethical. Also, in order to change your stock valuation, you need to make sure that you inform SARS of your reason, giving them good reasons, and this needs to be done in writing. Okay. Understand that by you writing, you got to actually apply to SARS, eh? You're not just informing them, you got to apply and obtain permission from them, giving them, like I alluded to early on, very good reasons why you are changing your stock valuation method. Okay, so I'm sure that answer is crystal clear in your minds. Let's go to the next one. Which of the two inventory valuation systems provides better internal control for your inventory, and why? Notice once again, we're talking about inventory, we're talking about internal control. Remember what we said? Internal control is there to safeguard our assets. Okay, now, Which of the two inventory valuation systems provides better internal control? Definitely. Which one? Yes. FIFO. Why? Why does it provide better control to you? Because you will know exactly which goods you are dealing with. You will know exactly how to be able to calculate the value of these goods, right? Now, just while we're on this question here, although it does not appear in this particular question, just think. Let me illustrate by means of an example. Think of two items, golf balls and golf clubs, right? Can you picture a golf ball and a golf club? Which system of stock valuation would you use for each item? Think about it. Look at your golf clubs. These are discernible items. You can identify that's an imported set, that's a titanium set, that's a different type of a set. All the golf players out there, you'll know exactly what I'm talking about. But when it comes to golf balls, obviously it becomes very difficult to ascertain which one was bought when. So now, if you were asked, what stock valuation would you use for golf balls? And what stock valuation would you use for the golf clubs? What would your answer be? Certainly, depending on the golf balls, one would opt for weighted average. Why? You cannot identify which golf ball was bought when. Understand, you walk into a golf shop and you notice the golf balls are all packed together in a basket or whatever. Your golf clubs are discernible items. You can ascertain especially and say, okay, I can identify that item, I can identify that set of golf clubs, etc. So keep that at the back of your minds. When we're talking about stock valuation, this is what we are referring to. Okay, now, remember that if you are using the FIFO method and you can clearly see at any one time, this stock is available, I've sold that stock, just to illustrate by means of an example. Just to illustrate by means of an example, so it becomes clear to you in your minds. Here's it here. Remember, we had 140 left over. Which 140 did we have left over if we were using FIFO? It was this 110 here plus 30 of those. So these items, you can see they were sold already. Okay? So this gives you an indication that if I'm using FIFO, I can clearly see which stock is left over, first in, first out. It gives me a better value of stock. Another important point. Another important point. When it comes to my valuation, when it comes to my stock valuation, I will receive a more accurate, yes, a more accurate figure for my stock valuation. Why? Because I know exactly that this golf clubs or these shoes were purchased. Remember, what did we say? These shoes were purchased. These shoes were purchased for 25,300. And they had import duties of 3,610. So you have an accurate value of the stock of your goods that you have on hand. It's a more realistic figure, right? Remember, with the average, we took an average of everything that we purchased. Here, we're looking at more realistic figures. We're looking at more accurate figures. Keep that at the back of your mind at all times. Okay. We've mentioned all of these. Another important factor, grade 12s, when you are answering questions of this nature, by all means, use bullet formation to answer. Bullet formation, bullet formation. You don't have to write paragraphs. Sometimes you write paragraphs of nothing. It means absolutely nothing to the person that's marking it. So yes, you can use bullet formation, especially in accounting, to answer questions of this nature. Finally, the last question that we come to, says here, what does GAAP suggest in respect of stock valuation? What does GAAP, obviously GAAP standing for Generally Accepted Accounting Practice, what does it suggest in respect of stock valuation? How should your stock be valued? Okay, keep this in the back of your minds. Use this in the exams. Stock should always be valued at the lower price. Why? Because we are using the prudent approach. Remember the prudence concept? And what is the prudence concept? We are conservative. Now watch the integration of different sections of your work. Yes, we're talking inventory valuation, but we're also talking about the prudence concept. The prudence concept says that you must be prudent, you must be conservative in your approach. And in this way, stock will be valued at the lower of cost. Cost, again, historical cost concept, another concept that you are supposed to be au fait with, or the lower of cost, or something interesting, net realizable value. What do we mean by this here? The lower of cost or net realizable value. Let's take an example. You have goods in your business that have cost you 100,000. Due to the technological advances, that stock now is only worth 70,000. At what value are you going to attach to those goods there? Are you still going to value those goods at 100,000? Or are you now going to revalue them and show them at 70,000? Definitely grade 12s. You will have to revalue that stock and show it at a net realizable value of 70,000, because GAAP suggests that stock must be valued at the lower of cost or net realizable value. Okie dokie, grade 10s, that is it. What have we done in today's session? We've looked at reconciliations, we've looked at internal control, we've looked at stock valuation, we've brought it all together in one question for you. We've worked very hard. And you know how Ashraf signs off, don't you? You have to aim for the moon, grade 12s, my accounting boffins out there. You have to aim for the moon. And perchance, if you don't land there, definitely you will be a shining star, an accounting shining star. Remember, let me sign off by telling you the secret to the A in accounting, my accounting shining stars, is practice, practice, and more practice. Use all the resources at your disposal and make sure that you're ready for the big day. Until the next time, keep your feet on the ground and reach for the stars. Goodbye.